Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings. And for today's report, it looks like we might be dusting off some old registration papers to see what is really going on. Stick around to decode it. Before we jump in, if you like unlocking the truths hidden in these documents, make sure you are subscribed and join our Discord community, linked in the description below. So today we are looking at a Form 8K filing from Global Net Lease Incorporated. Now an 8K is basically a report for significant events that shareholders should know about happening between the regular quarterly reports. Think of it as the company letting you know about major surprise parties or unexpected guests showing up. And the big date here is the 7th of November 2025. That is when something important happened. The company is Global Net Lease Incorporated. They are a real estate investment trust focused on net lease properties. Basically, they own buildings and lease them out long term, often with tenants responsible for property taxes, insurance, and maintenance. They are incorporated in Maryland and have a commission file number of 001-37390. Their principal executive offices are located in New York City. This report is being filed with the US Securities and Exchange Commission, or CC. This is the government agency that oversees the stock market and makes sure companies are being upfront with investors. Now, why are they filing this 8K, you might be wondering? It seems the main event here is about a prospectus supplement. What is a prospectus supplement? Think of a prospectus as a company's brochure that details what they are selling to investors. A supplement is an update or an addition to that brochure. In this case, they filed a resale prospectus supplement. This supplement is to a registration statement from back in September 2023 related to selling shares of the company's common stock. The key here is these shares are being resolved by existing stockholders, not by the company itself. This is all happening under a registration rights and stockholders agreement. Essentially, this agreement gives certain stockholders the right to have their shares registered with the CC so they can sell them. And here is a really important point. The company itself is not selling any of these shares and will not get any money from these sales. The money goes to the selling stockholders. This filing is simply about making it legal for those stockholders to sell their holdings. The specific stocks involved are the company's common stock, which represents ownership in the company, and also preferred stock like Series B, Series D, and Series E. The filings mention common stock and preferred stock in US dollars and in shares. This is standard information related to stock types and how they are measured. Looking at the securities registered with the exchange, we see their common stock traded under the ticker symbol GNL on the New York Stock Exchange. They also list their various series of preferred stock GNL, PA GNL, PB GNL, PD and GNLP all on the New York Stock Exchange as well. This tells us what kind of stock people are trading and where. And as part of this filing, they have included an opinion from a law firm called Venable LLP. This is common for these types of filings to get legal confirmation on the issuable shares or resale of shares. This opinion is filed as Exhibit 5.1. Essentially, they are getting a legal stamp of approval. The report is signed by Edward M. Weil Jr., the Chief Executive Officer and President. Now let's put this into perspective. Global Net Lease Incorporated is a company that owns a lot of real estate leased out to other businesses. This filing isn't about them suddenly making a ton of money or losing a ton of money. It is more of a procedural update. They are allowing existing shareholders who perhaps bought shares in a private offering or through another arrangement to now publicly sell those shares. Think of it like this. Imagine you bought a bunch of limited edition sneakers directly from the manufacturer. They weren't available for everyone to buy on the open market. Now the manufacturer is filing paperwork to effectively say, okay, those people who bought from us directly can now sell those sneakers on platforms like StockX or GOAT. The manufacturer isn't selling more sneakers themselves, but is enabling others to trade what they already own. The impact on the company's finances right now is minimal from this specific filing. It doesn't mean new money is flooding into the company. The proceeds from these sales go to the selling stockholders. However, it does mean more shares of common stock could potentially become available on the open market. If many of these selling stockholders decide to sell their shares at once, it could increase supply and potentially put some downward pressure on the stock price in the short term. But that is not a guarantee and depends entirely on market demand and how many shares are actually sold. It is important to remember that preferred stocks listed here are different. They usually have fixed dividend payments and are less volatile than common stock, but they also typically don't offer the same upside potential. So what does this all mean for investors? It means that if you are watching Global Net Lease Inc., you should be aware that there might be an increase in the number of shares available for trading from these selling stockholders. This isn't a sign of financial distress or a sudden turnaround for the company itself. It's more about fulfilling previous agreements and allowing investors who already hold these shares to liquidity. In terms of strategy, this filing doesn't really reveal much about Global Net Lease's future plans for growth or its ability to generate profits from its properties. It is a legal and administrative step. The real story for Global Net Lease's financial health and strategic direction would be found in their more detailed quarterly or annual reports, where they discuss revenues, expenses, property acquisitions, and leasing activities. This 8K is a footnote in the company's larger story. It is good to be aware of it, but it is not the headline. The headline would be how well are their properties performing, how well are they managing their leases, and what is their overall financial performance looking like. This filing just ensures compliance regarding the resale of existing shares. Looking at the bigger picture for a company like Global Net Lease, their strength lies in their diversified portfolio of properties and their ability to secure long-term net leases with solid tenants. However, a risk for any real estate investment trust is market downturns that might impact property values or tenant defaults. Also, rising interest rates can affect their borrowing costs and the desirability of their dividend-yielding stocks compared to other fixed income investments. This filing doesn't really give us a clear picture of their current financial performance. We'd need to look at their quarterly earnings reports for numbers like rental income, operating expenses, and net income. Those are the numbers that tell the real story about the company's health. This is purely a registration and resale matter. So to wrap up, Global Net Lease Inc. has filed an 8K to update the market about the resale of shares by existing stockholders. This is a procedural step to comply with previous agreements and doesn't represent new stock issuance or fundraising by the company. It means more shares could become available for trading, paving the way for those stockholders to sell. In my opinion, this filing is more about process than performance. It is a legal necessity for the company to facilitate the resale of shares as per prior agreements. It doesn't offer insights into the company's current financial health or strategic direction. The key takeaway is that existing shareholders are being given the green light to sell their shares legally. This could potentially increase the supply of the company's stock in the market. Investors should look to the company's regular financial reports for a true understanding of its performance and outlook, rather than focusing on this administrative filing. The company's direction seems steady in terms of fulfilling obligations, but without more financial detail, we can't assess growth or profitability directly from this document. The opportunity is for existing shareholders to cash out, and the risk is potential short-term price pressure if many sell at once. Alright, that is our breakdown of this particular filing. What is your take on this type of disclosure and what it means for investors? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.